Job costing is not accounting, it is not bookkeeping, and it's not a report. It's the only way in business you know exactly how much money you've spent on a project, especially for construction. So today, I'm going to walk you through how to set up job costing, because it's not a one-size-fits-all. I have a formula, a template that we actually use with all of our clients. I'm going to give you examples of how we implement it and how it can affect you. Because at the end of the day, anybody who self-performs, this is your biggest risk. You can mitigate risk when you buy all the material, but you can't mitigate risk when you have people out there and they underperform, or it wasn't up to the number of hours that were estimated and you have to eat the cost. No other industry is like construction. Everybody knows their costs. If you go to a restaurant, they know how much that steak costs and how much the beans cost, how much their electric bill is on average. They understand all of the costs to charge you a $40 meal. And that's why they continually upcharge and adjust pricing month over month or year over year, because everything goes up. But in construction, we like to pretend that we can act like that, but it's not even close to the same. When you open a set of drawings, there's so much gray area on there. If you look at a civil set of drawings and you're supposed to cut 10 foot across this giant span, that could be 10 foot or that could be 8 foot or that could be 12 foot in some of the same spots. But the land survey doesn't tell you that. So there's a lot of areas when you're doing that. Now we have to figure out how much we're going to fill. That's a little easier, but it depends on what size of bucket they use to dig it out. We have to think about how much are we going to cut and haul off. What if that's more than what we assumed? And what if it's less? What if we overbid and we don't win projects because we're always being that like nervous Nancy, like, I want to make sure I'm covered and protected, but then you never win any projects. We need to know where your numbers are so you can be very competitive and be guaranteed profit by performing well. We're just so fragmented. Like I said, in the estimating, there's so much gray area, but think even further than that. You have change orders, what's approved, what's not, how much can I charge, how do I prove costs for time and material on owned equipment? There's so many things that are out there that if you don't job cost, you can't prove, and you're going to sink your company every single time. I've seen it. I mean, there's a reason that 80% of construction companies fail within 10 years, and it's because nobody understands this or how to set it up unless you've come from that background. Without these real-time tracking, you can't adjust on the fly. So there's 3 things that job costing really gives you. You have early warnings, you have time to fix your mistakes, and you can control instead of playing damage control. So an example I like to give is when I was a project manager doing a runway project at Langley Air Force Base. We were doing some duck bank, and it was 10,000 foot for this runway, roughly. We had it broken up, job costed, every 1,000-foot section. So that way we could see a trend over a 10-month project. How did the first 1,000 foot go? Are we improving, or are we slowing down, or what's going on? It's easy to do that when it's one lump sum, but basically what we found is it was taking twice as much time and 1.5 times the material we thought to build that project on the first 10%. And so did a site visit, talked to the superintendent. What was happening? Why would it be over by double? That's insane. Like, we've done this forever. We've done this for 30 years. It's not like things changed all of a sudden. But what happened is, because we were in a swamp and the spec called for a certain amount of compaction, we had to try to meet that. And so it was either too wet or not compacted enough. And so we kept going back and forth, and that's why we were wasting time and materials trying to make it work. So at the end of the day, what we decided was, instead of doubling our labor budget, which would have gone from $1 million to $2 million, and increasing our rock budget for the encasement, it would have gone from $500,000 to $750,000 the way we were doing it. And we would have had to just absorb those losses. It wasn't something that we could claim as well, we didn't know this when we started the project. Like, it was all right there in the geotechnical and the specs and everything. It was just, it wasn't working. It was a wet year. We couldn't control it. It was out of everybody's control. So what we did is we decided we're going to put in flow fill, which, if you don't know much about concrete, flow fill is basically like sandy concrete that hits a certain compaction, hits around like 99% within the first 5 hours. Well, that's perfect. So we put that around there. It cost more. It cost about $30,000 more than the rock budget would have, but it was significantly less than everything else we were going to sacrifice. And it was actually faster. So with all the other efficiencies we made a guaranteed loss of 30,000 for a much bigger profit on the other end. We actually made 3% more gross profit than we would have had we not done that. We would have lost, 10, 15% overall because it was such a big mistake. But that's the power of job costing. In the first 10% of a project, in the first 3 weeks, I knew that was a problem to ask. The field saw it was a problem. Everybody who was looking at the financials was like, what's going on? Why is this happening? And it's just the red flag. It's not right or wrong. It's just when we were 1 month into the project, we had time to correct and change course. Versus if we got to the end of that project, we're like, wow, we lost $1 million. I guess we're going to try to get a change order for this. Or we're 3/4 down the runway and we're like, we can't afford to stay in business. We're going to go out of business. That's what most people do. You are not most people. If you're watching this, I know it's a little bit of a rant, but you are not most people. This is how you fix it. So a lie that I hear so often from potential clients and clients is my CPA told me I just need a job cost, or my bonding agent told me I need a WIP report, or there's all these things. My last CFO said I just need a job cost and my company will be better. But all these people have all this knowledge because they've worked with other companies that have done it, but they don't know how to implement it. And so that's what this whole video is going to be about, is how to implement it, how to set it up yourself so it makes sense and it's right. Because that's a problem that I've found that not many other people know how to fix. People that are really good at job costing work for big companies, and they don't leave because the system's in place and it's easy and cush. That's why they make a lot more gross profit than smaller companies, because you're not trying to force hard work over a system that's just repeatable outcomes every time. So the three things, though, that we want to look at when we set up job costs are, we want it logical, so it makes sense to anybody that thinks about it. We want it repeatable, so it doesn't matter if John does it or Mary does it. Whoever is running this job has the exact same cost codes and knows exactly where everything goes every time, so we can compare apples to apples. And then we also want it trackable in real life. We want the field people to know, hey, we're going to track how much labor it takes to put in this manhole, or from mile marker 1 to 5, because we need to know so we can do these things. Or we're tracking unit A in a multifamily, or we're tracking floors, or whatever that is. You solve a lot of problems, like something is too vague or too granular when you think about it. Like, how would my field people actually want to track this? So speaking of too vague or too granular, those are the two extremes we find. If it's too vague, you just track material, subcontractor, equipment, labor, call it good enough. That's good enough for your accountant, for your CPA, for filing taxes. That helps them know everything. It helps your insurance agent know how much risk are you, because it breaks it out. It's not just one lump sum. But what it doesn't do is help you know, how much did I spend on rock? Did I underestimate it? Do I need to fix it moving forward? How competitive can I get? And on the same token, you can get way too granular. You can say, I want to know how much rock did it take to do this sidewalk, and then how much rock did it take to do this section of the building pad, and then how much for this section and how much for that section. We want it to be about a month worth of timeline for labor, and we want it to be in buckets bigger than 10,000. So, for example, if you're doing like a one-off situation, there's a pool, for example, and you have to put a base load of rock down for the pool, and that load of rock is $800. It's not really worth tracking that separately than anything else, because you can only change $800 worth of risk in it. We're gonna dive into then now, how do we actually set up cost codes? We're gonna start with the high level. We do want to track it so it flows into your chart of accounts and your general ledger to be a cost of goods sold as material, subcontractors, equipment, labor, other. I have small tools, I have a couple others, but direct job expenses. We want to track all of those, just like your accountant wants. but we need it more granular. So what job costing software allows you to do, and I'm sorry for all the people that are fooled into thinking that QuickBooks actually job costs. It doesn't. You can't, at least effectively. It's kind of like saying I can build a business model on a spreadsheet, but is it the most effective way to do it, or is it going to take me 50 hours to do it or 100 hours to do it? Like, sure, QuickBooks, you can do it if you're willing to throw hard labor at it, but you can use software for $100 per $1 million of revenue and get it just implemented as part of it. So anyway, off that tangent, we have it set up where under material, we have a bunch of cost codes. You can have up to 10,000. I just have up to 100 because my subcontractors don't need 10,000 cost codes. I don't want them to even know that's a possibility, because then they'll want to track wire nuts. But what we do is we think again about 10,000 or higher, like an annual dollar amount, because if it's under 10,000, it's really hard to make it worth its time to track. So using the example of a civil contractor, and again, this depends on what kind of work the civil contractor does, whether they subcontract stuff out, like hauling and bringing in rock, or if they actually do it as material. Because if people haul and they're showing up on site, they have to have a COI. We don't want to label them as material, but that's a thing for another time. So in this example, though, I'm going to say the rock is material number one. We have a $15,000 budget. This is how you read it. In months 2 out of 5, we've spent $4,850. We anticipate that there's going to be $8,500 more. We actually think it's going to be $6,000, but we want to make sure we're protected just in case we miss something. So we already know in month 2 we're making $1,600 on this area of work on rock. That's awesome. We go down the list. We put in PVC. We put in anything that's a massive purchase order is how I think about what should be in there, because it makes it easier on your accountant. So that way you get more timely reports, because granular is great, but if it's not done in a month, if it's done 3 months late, you can't make a decision anyway. So just my 2 cents. You put in all your cost codes, whatever you want, up to 10,000 again. I track taxes separately because that hits a different line on your general ledger. And also we want to track where that is. We want to track how much are we actually paying on taxes. I've seen in certain business models, like when I was in Nebraska, if we received material into Nebraska and then moved it ourselves over to Iowa, we paid a different tax than if we just shipped it to Iowa. And so you can kind of play the game there to see, is it worth it? Is it not? Do we prefab? Where do we prefab? Which warehouse do we want to store it in? That kind of a thing. And then anything else, we just lump it all together for consumables and miscellaneous. And that's going to be things like Home Depot runs, screws, wood, EMT clips, miscellaneous things. I mean, there's so many things that you can throw in there, but it's specific for every subcontractor. So you'll have to defer to yourself to figure out what is worth it. Think if you don't want to track it, nobody else is going to want to track it. So think about it like that. We're going to talk later also about how this aligns into your estimate and how all of the information needs to flow. So keep that in mind. If you want to jump to a later part in the video, just know that that's coming. The next big section we're going to talk through is subcontractors. Again, this depends on your business model. Every civil contractor I've ever worked with does different things. Some want to do asphalt, some want to self-perform concrete, some don't want to touch anything that's topsoil or afterward. They just want to do the rough grade and call it good. They want to do utilities. That's fine. I don't really care. You just need to know that you have to set it up that way. So anybody who comes on work or on site and does work for your company and it's not a W-2 employee needs to be labeled a subcontractor, because it's the COI side of it. So ones that always come to mind for me are parts and smarts for a fire alarm subcontractor. Just because they're doing parts and programming doesn't mean that if they don't fall, they're not going to get hurt. If they get hurt, somebody has to cover them with insurance. If they're not covering their own insurance because you didn't ask for a COI, you are going to pay out of your insurance for that. So that's kind of the delineator for material versus subcontractor. I'll let you decide how you want to do it. You'll notice that every line moving down from subcontractors, we always have a miscellaneous spot. And that's because maybe we don't typically do survey work, but on this one project, we needed to do it. Instead of adding a custom cost code for every single thing that ever comes up, if there's a one-off situation, we just put it in the miscellaneous and we can track it there. That's fine. At the end of the year, we can evaluate, wow, we used a lot more survey than we thought. Let's go ahead and add that as a cost code and start tracking and moving forward. It's very reasonable and logical, again, like our core values here. The next section is just equipment in general. What I like to look at with this is owned versus rented versus miscellaneous and all these different things. What we find is this is an area that everybody is greatly undervaluing what they own, and they're losing a lot of jobs because they're pricing rental rates. They don't know how much they should charge. They have a conglomerate number that says, hey, this is per man hour or per hour of excavator, it's $300 an hour. And that includes fuel and everything else. They don't really know. Well, that's great, except say it's a 4-hour job and you have a $1,200 drop-off fee. Now all of a sudden, you're actually losing money on that just because you didn't think through all of it. So, and also, when you own something and it goes down, you still have to do the work. You're still contractually obligated to do it. So we look at rented equipment. How much did we have to spend to make up for that? Because if we don't have it in the budget, we need to know it early and understand how fast it needs to happen. And if you look at this section, just for an example, overall, we're losing $14,000. If you looked at the equipment as a whole every month, you're not going to really understand sometimes, like this equipment or this material up here, you're going to think you're tracking well. But if you have this kind of a situation where something's not coded right, or maybe it's put in the wrong place and you're over forecasting, you're going to make mistakes and you're going to think like, oh, wow, there's a big problem and I didn't know where. Or it's going to be the other way where it's like, hey, it doesn't look like there's any problems. And then all of a sudden you're hit with a $50,000 overage. So just something to think about. I like to track trailers separately, small utility equipment, generators, things like that, miscellaneous, whatever. But we do it month by month because that's an easy thing. You know how much money it costs you to have these things out there per month, and you just estimate it, figure out percent complete. The next section, this is one that everybody misses in their estimating, and I'm going to show you where to add it and how to add it. But small tools and gear. Nobody puts in for hard hats and safety vests and drill bits and impacts, screwdrivers, whatever. All the little things that are necessary and that break on a job, they're not just free. You have to buy it. And if it just all goes to overhead, you don't actually know. You can't track which crew is good at like keeping stuff or losing stuff or breaking stuff. And you can't fix things, right? Sometimes we'll add extra codes in here. When I worked for one company, we would occasionally buy a wire tugger or a cable cutter specifically on one job because it needed it and we knew it would burn up in that job. So instead of having a small tool budget, just for that, we would put a line for like a cable cutter. That's $4,500. We know that we want to allocate specifically for that. And it was like a to-do. It's like a checklist. Just helps you know where to lock in your money. The next section, miscellaneous CJE. We use this personally as like a catch-all for bookkeeping if we're not sure where it should go. Now, obviously, we have 70 codes here. There should be a place for it. But if somebody can't figure it out, or it's like, hey, I think this is coded the wrong job, or it says this, but I'm not sure. It looks like a duplicate or something. We put it there because it's a red flag that we talk through every week with our clients. That's a best practice I would recommend you guys make, because you always want to make sure that it shows up in your job cost, but also you want to make sure that there's a place that it's kind of like a red flag situation for you. The next section is labor. This is probably the most complex because it's very custom to every project and every business model. So things that I like to look at, the best practices are, I want these to be month-long scopes of work. I want it to all be compounded into kind of like a type of work. And I want it to be able to be easily pulled out of my estimate. So what that looks like is if I'm running sewer and water at the same time, and I know that they're kind of going similar by each other. They're just different layers and things. What I'll do is I'll combine those two, and I'll set, hey, this from manhole A to B, this 500 foot is both of these combined because it's going to take about a month. I don't want my field people to sit here and think, well, I think part of it is, I think that this part at 4 foot instead of 5 foot is where the delineator is from work for this type of work. So half the time they're out there trying to figure out, okay, I'm digging this and I put the trench box in and I got this. That's no way to job cost. They're just going to make something up and it's going to be completely wrong. It's not going to help you at all. So if we put it in where they're doing one task for the day, it's all encompassing of this type of work. It's easy to delineate. They cost code it that way. The reason we do this is because then it gives you you basically are making it manufacturing style where it's like an assembly line. Okay, we're doing we're trenching, and okay, now we're doing base stone. Okay, now we're putting in the pipe. Okay, now we're covering it. Okay, now we're backfilling. That's kind of like the process, right? And we can track which aspect of that did we do wrong on this section, and how do we improve it on the next section? That's the exact same thing. People that do multifamily, this is a big thing where you look at unit A, unit B, floor 1, floor 2, floor 3. Like, we want to make sure everything is continually improving and we can start to see trends and problems along the way. And again, if you do small projects that are under a month, you're just going to use one cost code. It's going to be, in my opinion, just small project labor, miscellaneous labor, because you can't track things daily. You're not going to be able to reconcile it. Your bank statement comes out once a month. So we can't actually go in and say, hey, all of this happened this quickly. It has to be all within a month time frame. So when you do your project financials and you have one that's just miscellaneous labor, it helps you know, hey, if I did this project in October, by November 10th, I should know how much labor I spent on that project, period. Same with all of my receipts and invoices. As long as they come in, I should know exactly where everything is. That's the goal with this. Moving on to the next section, I always put in line items for time and material and downtime. We always want to track, when did the GC tell us to come out and we stood around and wasted time talking about safety stuff and somebody wasn't ready. I want to make sure I have a place that I can go to a meeting as a project manager, as an owner, and say, hey, you wasted, $5,000 worth of labor. Here's my documentation. Like, you're not going to hit me with a back charge, or you're going to reimburse me for this, or, different things, horse trading. But I like to put these in early because that way it gives the field, it's already built into the system where they can start to code to it. If a time and material change order comes up and you've approved it, they have a place to put time to and material, and they know exactly where it goes, because now we have to go prove that time and material. We have to prove every cost. We have a line item to do that. And time and material is not something you can sit around for a week waiting to set something up. The next section is going to be direct job expenses. These are things that are contractually required, but you can't bill for them. You can't bill for a superintendent. You can't bill for your project manager or per diem or BIM or whatever it might be. So we have to track it, though. We have to make sure that it's actually being allocated properly. So this is just a list that I've come up with, that we use with all of our clients, and we add to it occasionally if we need to, but it's always, you have a superintendent, foreman. Maybe they have different job titles, but you always have something like that. Project manager, assistant project manager, safety, admin, BIM. You can read the list here, but the problem is people don't put these in their bids. And this is the first red flag, is when we set up their job cost codes. I'm like, here's the typical things. Which one do you want to leave out? And they say, well, all of that's overhead. Well, no, it's not. And we're not going to allow it to be, because in a time and material change order, I need to be able to know that it's being tracked properly so we can show that. This should be your general conditions, or part of on that page. The last part is general conditions, though. And this is something that most people that do blue collar work won't even care about. This is something more for the accounting side, the back of house. But we track factoring interest, or if you use build or mobilization funding and it's project specific interest, we can actually allocate it there to see if you estimated it. We can see how much did you spend. We can look at special types of insurance. If you had to get that $10 million umbrella insurance policy and that's outstanding for everything else, we can at least track, hey, I charged for it and here's how much it cost me. Bonds, and then contingency is like a line item that I don't recommend putting money into for estimating purposes. What we do is we use that for forecasting and cost to complete purposes, and we'll walk through that later in another video. I want to shift from how we set up cost codes to how we now use them, because it's not a one size fits all, right? We want to make sure that there's a flow of information, and every company is going to be different, whether it's an admin, whether it's field, whatever it is. So there's two aspects of how everything gets costed into these now. You have the accounting side for AP and the labor side for timekeeping. We're going to start with the AP side. So somebody has to be knowledgeable about the project and how everything kind of flows together to job cost properly. We have to know which job it goes to. We have to know which cost code something goes to. We have to know, we have to approve it or we have to not approve it. So built into the system we use, it's just a PM or whoever approval. Basically, our bookkeeping team can do best guess. If we know it's concrete because it says, hey, this is Concrete Solutions, the invoice, and it says the project number or the job, we can obviously put it there. And the PM can just say, or the owner can just say, yeah, this was received. This is right. That's the accurate amount. This is how long they were out there. This is exactly how much we got. Approve. Or they can say, hey, this is a little preemptive. They invoiced us way more than we should have. We're going to hold this bill and it'll kick it back and we'll start that conversation. And that happens for anything that's material, subcontract, equipment rentals, things like that. On the other end is going to be your labor side. And this is going to be tied for your dailies and tied to your labor. So we want to make sure that the superintendent or a foreman, this is the best practice in my opinion from what I've seen, instead of letting everybody run rampant and decide what they're going to do on their own, having apprentices and whoever doing their time, we're going to have the superintendent say, okay, these 3 people spent this many hours today on this cost code, whether that's water utilities. They were working on rough-in floor 1. They were whatever your custom labor codes are. That's how we're going to track it. And then when that gets processed through your payroll, that gets allocated to the project and the correct job cost code because it's already there. You can have software that makes it a lot more streamlined and just happen for you, or you can do the manual process of you have to take the general 40 hours that they worked this week and you have to break up, hey, 10% of it was for this, 50% was for this on these jobs. I'm obviously going to be in favor of just automating it because it makes less room for error and faster results and faster informational process. The other aspect is your equipment. So that comes into your dailies. Sometimes that'll be lumped into your software for your job costing, but we need to know, with owned equipment especially, which truck, which piece of equipment is on which job, which day, how much are we going to charge per day? And then it just becomes a line item. We just say, hey, this truck costs us $38 a day. Put it over here. Put it here. That's kind of how we break through it. All right, the last section we're going to look through is how we get everything to tie together with estimating, because that's the first domino that has to fall. We have the cost codes set up. We know how to set them up, what we want to track. We know how we're going to track them, but how are we going to even figure out from our estimate how much needs to go where? So I'm going to give you an example. What we've come up with is this example for a civil contractor. So first off, we have all of his his material. We have his rock, how he wants to track everything for this client of his. You have subcontractors, you have owned equipment, rented equipment, just like we've talked through with all of these things. Now, how do I make that happen? So we took their existing spreadsheet, and it doesn't matter if you use a spreadsheet, it doesn't matter if you use software, it doesn't matter how you estimate. Everybody's different. It just matters that you tie this concrete price into this concrete over here on this budget. And we do that as part of our package services for people if you need help with that. But this is going to be your ultimate test to figure out if you know how you really know how to operate your system. So we'll walk through the water one for an example. If I say you can do this two different ways. You can put, I have 100 feet and I want to put in a unit price, or I can say I have one lump sum of 5,500 foot of pipe. Concrete, I'm going to do 500. Oops, sorry, not 500 there. We're going to do 500 cubic yards, 125,000. I want to make that 5 just because it makes more sense, is more aligned. We know this is going to be 3 people. They're going to work 10-hour days. They're going to work 4 days. That basically pulls through everything, and I'll show you the other cover page. We go down, we have, hey, we're going to order, they use subcontractors for their concrete structures. So we have 3 of those. The quote was $5,500 a manhole. That's all built in. We have a 10% markup because it does take us time to do their paperwork, to manage them and schedule them and make sure they're there and call them and bill and invoice and all that stuff. So we make sure we do that. We have 1 water meter, 1 water testing with the city. We go through our equipment. We were still waiting on a couple rates, but we're going to say we have 2 crew trucks for 3 days. That automatically has a burn rate of 1 gallon per hour. We have a burn 6 because of how many hours it's going to be running for this amount of time. 21.30 for fuel based on a fuel rate over here. This is how much the owned truck portion is going to be, and that comes up over here. We can go in and we can say, hey, we're going to have, I know this is only a 3-day project, but we're going to rent a mid-sized excavator for a week. That gives us our fuel added in. That's our mobilization cost. All of that flows to where it should. Okay, cool. Now we go to the bottom. This is all auto-calculated. We built this to where they don't have to figure out how much superintendent time, foreman time. We don't have to guess at any of that. It's just a percentage. We know the foreman is 5% of all labor. We know the superintendent's 5% of all labor. We have their hourly rates built in. We have the project manager is going to take 50% of what the superintendent makes, and that's charged at $105 an hour, burdened rate. Burden meaning anything that comes along with that. So if I pay a guy $50 an hour, we know that he also has a truck, and we know he has health insurance and a 401k and all of these things. We have to make sure he's covered for that. So that's our burdened rate, what he costs the company, payroll taxes, all of that stuff. We have some safety time in there. We have to do STS sheets. We have to do a safety manual. We have to do a safety meeting, whatever. We still have to put some time in there for that. We come down, we can say per diem. This is, it's 3 people for $50 a day for 3 days. We have a budget in there for that. Mobilization costs. We think this is going to take 2 people for 4 hours each, so that's 8 hours. We have a rate for mobilization now. We have it built in where we know, hey, if these 3 people are on site, they're all going to have phones. It's a daily rate. There's a day and a half worth of them using their phones. We have a budget for that. Now it's covered. It's no longer an overhead expense. It's all something that we can pass along to the general contractor when they say, prove me your costs. We can do that. And at the bottom, it tallies it all up. So the way that this kind of flows over then, this is the estimate total page. This allows them to see, we're doing a water project. Here's the total bid. Here's the burdened rate for employees. Maybe that's the minimum is because they might do prevailing wage. Maybe it gets up to 70 an hour or whatever. They have to be competitive. What's their tax rate? Because taxes get added in. I'm going to walk through this with you. So we have their material, all of that. This is a lump sum. And this isn't how we're tracking it in the budget. This is how we're just going to look at it when we go to do a proposal for the GC. So the material is $6,900. You have taxes are built in, your labor, your subcontractors, equipment, direct job expense. Exactly like the high level amounts that we talked about. Now we get into the small tools. I told you earlier there's a budget for small tools. What we do is we take 1% of the total labor of a project. So on a $6,600 3-day labor thing, you're going to have a couple people that need random things. Maybe they need to go buy a ladder. Well, it's not going to cover a ladder, but it's going to buy them some safety glasses or gloves if they misplace them, whatever. Employee benefits. This is going to be, maybe you want this to be a bonus. You can put a 2.5% bonus in there. Hey, if you guys come in on your labor, this bonus is up for grabs and you guys are going to share it. It's going to be split 3 ways. You can put it in whatever percent multiplier you want. This is a big one. Nobody counts for this, but when you have an annual rate on your line of credit and it costs you, or your average days that it takes you to get paid is 60 days, that's average of about 0.03% a day, which doesn't sound like a lot. On a $46,000 job, that's costing you about $700. So we account for that. We make sure that somebody's paying for that. It's not us. And you might think, well, Josh, if I raise my prices and I include small tools and employee benefits and financing costs, I'm never going to win more work. And that's cool, because if you win work the way that you're currently doing it, you're never going to win profitable work. You're going to continually lose money until you get to a point you've built up so much debt that you have to file bankruptcy. Instead of going to a general contractor and saying, like, look, I know I'm not the lowest, but I know my cost. I know this is exactly what it's going to cost. And I can't do the project for less than overhead plus this these small fringe benefits plus this subtotal. I know my minimum cost is $44,916. And if it's a cent lower than that, I cannot help you, because that is at cost. And then you throw on your profit. And then you have a bond option if they want to know. So what this allows you to do, anything in orange, we can manipulate. So say you have a 19% overhead. We know we have to charge a minimum of an extra $3,000. If you want to make 1% profit, you know how much that's going to be. So you come out to the same dollar amount because you know you have to be under $50,000 or whatever that is. You kind of know where things need to be. The goal isn't to charge more money. The goal is to know where every dollar that you do estimate, you can precisely know where it's going. We know $400 of this is overhead. We're not marking it up 50% and ranging between 5 and 10%, because the problem with doing that is if you have a 10% retention, I'm waiting on my 10% the entire project. Now if I have a 5% profit, I am paying 5% to build this project until 2 years later when I finally get retention. And that's not a good way to run a business. We want to know where things are, how it's all flowing. The other downside to all of this is you might think, hey, under a 15% is a great overhead, because that's what a lot of people believe. But if I put 10% here and 5%, like a typical change order, you're allowed 10% overhead, 5% profit. The way that the math comes out when you stack it, it comes out to 13%. If you have a 14% overhead, you are literally paying 1% of whatever that change order is that happens. Let that sink in for a second. Now, I'll make it a little worse when you do time and material. If you don't track everything exactly the way it needs to be. If you say, hey, this concrete ticket is for this part of the change order, and I know I'm going to get reimbursed and make 10% on it, or whatever, 10 and 5, that's cool. Except until they say, I don't think that ticket, because that day you weren't actually doing that. I don't have it on my daily logs. They're going to argue with you about it. Well, now you lost $6,000 and you lost that 10%. So now you're really losing money on the entire time and material ticket because you are running such a thin margin. If you don't know, reach out. We'll help you figure it out. That's a really easy call. And then we'll figure out how much we need to charge. If you have an 18% overhead, that's fine. Some people do. It's just the way that you job cost things. But you want to job cost as much as possible to reduce your overhead as much as possible. To finish this whole section up, we've gone through kind of how this estimating sheet works. We're going to look back at the budget on this one. So this one was blank when we started. We filled out a bunch of numbers. Now I have a budget for water. I know how much money I can spend on that. And as change orders pop up, I can add in. So this is the hard part. How do I map what cost comes to the water material? And this is a little more vague than I'm used to doing. But this is how this client specifically wanted to track their material, because their guys in the field are the ones that cost code things. And they're not going to know, oh, this material goes toward PVC Schedule 40 or whatever, however it's listed, they're going to know, oh, I bought that for water. I bought that for storm. So we go back into, you can see there's a formula here. It's linked in. So it automatically creates a budget of how much every single thing is allowed. It automatically fills that out up here. We have how much it is. We have how much profit we're supposed to make. That's 13%. We have all the costs down here that add up into there. The bond's in there in case we need it, or we can zero it out. That's where that percentage was off. So ultimately, that's how everything should flow. It should be an automated system. If you don't have a system that does all of these things for job costing, we build that for you. It takes about 60 days, and we manage it for you for a year. And we can continue on past that. That's ultimately what we do for clients. And I'm not so special that you guys can't do this without me. It's just, this is how we do it. This is how we get repeated results from every single person. Because you have to start at the beginning. If we don't know this project's making money, then we're losing money as a business. If the project's making money, but there's too much overhead, we're losing money as a business. If those two things are right, we need to look at cash flow. If cash flow is negative and we're constantly stressed about how am I going to make payroll on Friday, what can I afford? My account goes from 100,000 to zero in the same day. Then we have to fix cash flow. And if we fix those three things, we're going to stay in business. We're going to be a profitable business, and you're going to take more home as an owner. That's the goal. Simplicity, replicable, and I hope that you can implement something just like this for your business.